Good. Now, I want us to look at a certain question here at a higher level. At a higher level. This is a income tax. Income tax. This is found in IAS 12, International Accounting Standard Gapi 12. Now, you find that in most cases in your paper, you'll get this concept. Examiner will test you on this concept. And therefore, there are some of the things that you need to understand regarding the income tax. Plus, when we talk about income tax, we're talking about tax that is payable in between the year or after 12 months. All the tax that will be paid beyond 12 months. So when you talk about corporation tax, and we talk about deferred tax, income tax is all about the two. Income tax is all about the two. So the corporation tax is the current tax that every company do pay at the end of the financial year. At the end of the financial year. Deferred tax is a tax that could be paid, but it was delayed. Deferred, delayed. It was not paid within the stipulated time. Within the stipulated time. How do we compute deferred tax? Remember here, we are dealing with a taxman. The property that you have, we need to, as a taxman, we need to identify what was the carrying amount of that item. What was the tax base of that? So some of the terms that you're going to find. What is the tax base? What is the carrying amount? What is the tax base? What is the carrying amount? And then you need to identify whether you are dealing with the asset, or you are dealing with the liability. You're dealing with the asset or you are dealing with the liability. So that at the end of the day, the taxman will be able to identify whether what you have is taxable or not taxable. Is it taxable or not taxable? So after which you'll be able to get the temporal difference, which will assist you to get what? The deferred tax. So today I want us to focus on the deferred tax. Computation of what? The deferred tax, not current tax. Current tax, I know most of you understand this. It's a liability. It's found under the liability section of the balance sheet. Therefore, I want us to focus on the deferred tax. I want you to do what? To take care of what? The carrying amount and the tax base. The tax base and the carrying amount. And then check whether we are dealing with the asset and or liability. Check whether we are dealing with the asset or liability. Please do me a favor by inviting all your friends. As we start. There's a question I want to share here, and you have to take a photo of that question. Allow me to look for this question. It was a very nice question, high level. I'm saying that this is a high level question. Huluma Limited, yes. Huluma Limited, yes. That is the question we're going to look at now. So I share this. As usual, class, I want you to take a picture of that question. Question 3, Roman number 2, Huluma Limited. Question 3, Roman number 2. Once you take a picture of that question, just signal. Give me a signal. Once you take a picture of that question, give me a signal. Have you taken a picture of that question? The picture of that question? Or we read together that question as you take a picture. Good. It is question number 3, Roman number 2. Question number 3, Roman number 2. The question reads, Huluma Limited, a public limited company, has a portfolio of investment including various subsidiaries, including various subsidiaries, and also undertakes various projects varying from debt factoring to investing in property and commodities. Investing in property and commodity. Huruma Limited, the following information was extracted from the group financial statement related to the deferred provision for the year ended 31st March 2021. Good. We have Huruma Limited acquired a controlling interest in a subsidiary Sukari Limited on 1st January 2020. The fair value of the asset and liability acquired were considered to be equal to the carrying amount with the exemption of freehold property, which had a fair value of 256 million and a tax base of 248. Because this is important. This is important for us. We have the tax base and we have the carrying amount. The carrying amount, remember, carrying amount is the same as the net book value of that item. Net book value. The net book value. The carrying amount is the same as the net book value. Therefore, the taxman will be comparing the two, the tax base and the carrying amount, so that we know whether is it really taxable or not taxable. The taxman will be looking at the tax base and then compare with what? The carrying amount. The carrying amount. So if for example the carrying amount is higher, if the carrying amount is higher than the tax base, we're going to get a positive value, and that positive value of course the taxman is going to tax us. It is taxable. If we get a negative value, it's not taxable. So we shall be doing this and see how we can do it. During the year ended 1st March 2020, Huruma Limited sold goods at the price of 48 million to another subsidiary, Wingu Limited, and made a profit of 16 million on the transaction. 40% of these goods were held in inventories of Wingu Limited as at 31st March 2021. Huruma Limited has a portfolio of financial assets comprising readily marketable government security, which in the statement of financial position with any gain or loss taken to profit or loss, these gain or loss are taxed when the investment are sold. They are taxed when the investment are sold. And therefore, we are told that currently the investment has a market value of 412 million and accumulated and realized gain of 64 million. Then we have number 4, Huruma Limited's loan asset and carrying amount of sharing 168 million after allowance for credit losses of 32 million based on a 12-month expected credit loss. Tax relief is only available when the specific loan is written off. 5. Huruma Limited has unrelieved trading losses of 20 million as at that 1st March 2021. These unused tax losses arose from the one-off restructuring exercise carried out during the financial year, and it's highly expected that the taxable profit will be available in future. As I read this question, in fact, I'm at the last point. Please make sure that you take a picture of that question, after which we shall be getting the solution to this. On 1st April 2020, Huruma Limited's deferred tax account had a nil balance, assume a corporation tax rate of 30%. Now, when they talk about the corporation tax rate, this is what you're talking about, the current tax, the tax that is payable by every company after 1 year. Great. Then we are asked to determine the deferred tax asset or liability for Huruma Group as at that 1st March 2021 in conformity with IAS 12. You're given 8 marks. So that is the question. That we are expected to look this afternoon. So class, allow me to stop sharing this. And then have a schedule here. So I can call it the taxable temporal difference schedule. Temporal difference schedule. Temporary schedule. So we can have some few columns. We can have maybe 4 columns. We can have 4 columns here. The first one, of course, it will be for particulars or details. So we have details. Oops. Then we can have our carrying amount. Remember what we said about the carrying amount. Then tax base. And then at the end of it, we shall what we are getting is tax temporal difference. Temporal difference to really assist us. Temporal difference. So you can maybe underline this. Once you underline that, it will be easier for you to do what? To tackle this question. So class, we are going to start with the first information. We are told over an asset here, and this asset, they are calling it what? Which name are they giving this asset? Freehold property. Freehold property. This is an asset. Freehold property. What is the carrying amount of our freehold property? If you wish to label this, as 1. What is the carrying amount or the net book value of our freehold property? Can you check from the question? Now I expect everyone have the question. What's the carrying amount? Can you see 256? In fact, now if I put my shillings here in 1,000, is it in 1,000 or in million? They have given me in million, so it will be easier if I put my figures here in million. I can put them in million here. Shilling in million, shillings in million, so that I'm able to work on this. My shillings are in million. It will be easier for me. To tackle that. So if I look at the question, I can see that my freehold property carrying amount, freehold property carrying amount is 256. Freeholder property 256 million. What about the tax base? Already the tax base is also provided. For that, we don't have to struggle. The tax base is provided. How much is our tax base? Let me see from the chart. For those people who are following. Can you see 248? In fact, it's the last item in that 248. That is our tax base. Now, with this being the carrying amount, and this is the tax base, we want to look at the temporal difference. We want to determine the temporal difference. Will our temporal difference be negative or positive? We are dealing with the asset. Therefore, we have to just check what we have as our carrying amount, which is 256, and then we subtract what? 248. This is an asset. Therefore, if you get a positive, that means it is taxable. And taxable is indicated with what? With a positive. So how much do you have? In fact, if I look at this will be 8. That will be taxable. It will be taxable. Then class, you move to the next item, that is number 2. Move to number 2. If I look at number 2, they are telling me of during the year ended that 1st March 2021, Huruma Limited sold goods at a price of 48 million to another subsidiary. Now, here we should be very keen. Because here examiner was very wise. To bring very many information to confuse you. On Wingu Limited and made a profit of 16 million on the transaction of 40% of these goods were sold in the inventory of Wingu Limited as at 31st March 2021. Now, what do we do here? How do we get our carrying amount? Of inventory? The particular here, the item that we are talking about here, it is inventory. Can you tell me Inventory. Should inventory be related with profit really? According to IAS 1, IAS 2, IAS 2. According to IAS 2, IAS 2, inventory. IAS 2 talks about inventory. Inventory. Should our inventory have profit in it? Should it have profit in it really? It should not. According to the standard, our inventory should not have profit in it. In fact, what we record as far as inventory is concerned, it is net realizable value. Net realizable value. So our carrying amount as at this point, it will be what we have minus the profit they are talking about. Minus the profit that they are talking about. So it is 48 million minus this profit of 16. That will be our carrying amount. Now, come on, I cannot proceed if you don't give me the carrying amount of our inventory. What is the carrying amount? Having explained that, give me the carrying amount of our inventory here. Carrying amount of our inventory here. That is very simple. You take 48 minus 16. What are you getting? 48 minus 16 tunapata ngapi? 32 million from Samson. Samson is giving us 32 million. 32 million. Now you ask yourself, how do we get the tax base in this case? How do we get the tax base in this case? I can see they're telling us that on the transaction, 40% of the good were held in the inventory of Wingu Limited as at 31st March 2021. 2021. How do we get, or how do we arrive to our tax base? How do we arrive to our tax base? How do we arrive to our tax base? Somebody. This is a two-way. This is a two-way discussion. So I expect somebody to respond to that. You told that 40% ndizo zimefanya nini? Zinaenda kwa wingu. So what is the 40%? Our tax base will be 40% of 48 of 48 of 48 of 48 48. Tunapata ngapi? And that one will just give us direct the tax base. Ni ngapi? Yes, how are you, Charles? How are you, Charles? I hope the video will not affect the rest. I hope the video will not affect the rest. If you're comfortable, sawa. But if you see some people start dropping, just know that your video is affecting them. Let me see. I'll be very keen here. All right. Good. Now, this one, if I multiply, if I take my 40%, that is 0.4 times 48, I'm getting 19.2 million. 19.2 million. I ask myself, what am I dealing with? I'm dealing with an asset. I'm dealing with an asset here. So what will be my temporal difference? Temporal difference yetu itakuwa ngapi? Temporal difference yetu itakuwa ngapi? What will be our temporal difference? Just have to pick what we have there. And then do your mathematics. Itakuwa ngapi pale? Somebody. Naona tunapewa 12.8. Is it really 12.8? Sheila anatupatia 12.8. I would wish to get a variety of answers here. Ningetaka kupata a variety of answers. Is there any other information that we have left? Additional information number 2. Kuna information tumeacha hapo kweli? Kuna information. Yeah. Yes, there is an information we have left. There is an information that we have left. if you look at what we have here, will our 32 be the actual carrying amount? Will our 32 million be the actual carrying amount? Wacha turudie hii venye nasema, naona 13.8 tunaambiwa kwa during the year ended 31st March 2021, Huruma Limited sold goods at a price of 48 million. They sold goods at a price of 48 million to another subsidiary, Wingu Limited, and made a profit of 16 on the transaction. So 40% of these goods were held in the inventory. So as at that date, the inventory that we actually have, it will be the difference. It will be the difference. Tax base sina shida nayo. Tax base iko sawa. 40% of 48. But now I have a problem with the inventory here, the carrying amount here. The carrying amount. Our carrying amount is not 32. 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 Who can give us the carrying amount? Who can give us the carrying amount? Figure. The carrying amount figure. The 48 minus what? 48. This is 19.2, and we are told the goods were what? That minus 0.2. That will be our carrying amount. That will be our carrying amount. The remaining. Itatupatia ngapi? 48 minus 19.2. 48 minus 19.2, hiyo ndio tunaangalia. Itakuwa ngapi? 48 minus 19.2 itakupatia ngapi? How much shall we get? Acha tuone 48 minus 0.2. Hapana. Is it 48 or 32? 19.2. Yes, 32 minus 19.2. So the carrying amount in this case, it will be 12.8. 12.8. That is the carrying amount of our inventory. Now you ask yourself, what will be the temporal difference? What will be your temporal difference? If I look at this asset, the carrying amount is below. How much below? The tax base. Therefore, this will be deductible. It will be tax deductible. Tax deductible of 12.8 minus 19.2. 19.2. I'm betting 6.4, and that is deductible. So you can put a tax deductible. Then we move to the next part. The third one. We are told of this portfolio financial asset. So we had a financial asset here. We want to see about this financial asset. I can see they have told us that the carrying amount of financial asset is so we have the third one, financial asset. The carrying amount of financial asset is 412. In fact, that is the market value, 412. We have to determine what? We have to determine our what? We have to determine our tax base. Our tax base hapa, naona walikuwa wanatuambia kulikuwa na unrealized gain. unrealized gain. We have unrealized gain here of 64 million. Unrealized gain of 64 million. Therefore, to get our tax base, we have to eliminate any gain. We have to eliminate any gain. So we come here and check. The gain was 64. So we have 412 minus 64. What are we getting here? 412 minus 64. 412 minus 64 class. Here I'm getting 348. 348. That means this is what? This is our tax base. Our tax base, as far as the financial assets are concerned, is 348. 348. So if I look at this one, there will be a 64 here. In fact, it is 64, not point. It is 64, which will be taxable. 64, which will be taxable. Then we move to the next one. The next one, we're almost done. We are told of a loan asset had a carrying amount of 168. That is the carrying amount. Okay. Then we are told that of 168. Then we are told that after an allowance for credit losses of 32 million based on the 12-month expected credit loss. So class, please note, when they talk of gain, make sure that you reduce that gain from what? To get the tax base, you reduce the gain from the carrying amount. If they talk of credit loss or the losses, you have to add it to the carrying amount in order for you to get what? The tax base. For our case here, we are having what? We are having loan asset. Having loan asset. So we have 168 as our carrying amount, and then we have 32 loss. So we have to add 32 here. You have to add 32 here. So we shall be having 200 what? 200 as our tax base. We have to add 200 as our tax base. And since we are dealing with the asset, this is loan asset. This is loan asset. Tell me whether it will be taxable or non-taxable. Will it be taxable or non-taxable? Will it be taxable? This is an asset. This is an asset. You can see it will be non-taxable of that the 32. This is deductible. It is deductible. And then the last item, I think this is among the last item. Huruma Limited has unrelieved trading losses of 20. So that means in this case, we don't have the carrying amount. We don't have the carrying amount in this case, but we have 20. We have 20 as what? As the tax base. We have 20 as the tax base. So, and this is a liability. So these will be walikuwa na losses hapa. Trading losses. So this is 5 trading losses. We did not have that, but we had this as our what? So that will be, of course, it will be deductible. It will be deductible. What is our total? What is our total temporal difference? Total temporal difference. What is our total temporal difference as far as that is concerned? Remember, our objective is to arrive to getting the deferred tax. What is our total temporal difference? Somebody can do the maths there. Somebody can do the maths there to get the total temporal difference. Tufanye hiyo maths hapo kidogo. Tupate total temporal difference hapo. Total of this. So I have 8 plus 64, and then so 8 plus 64 minus 6.4 plus 32 plus 20. So what are we going to get? Tunapata ngapi hapo? What will be our total temporal difference? Tufanye hiyo simple mathematics hapo. Itakuwa ngapi? So this is 8 plus 64 minus 6.4 minus 32 minus 20. Oops, I'm getting 13.6. Some people are getting 13.8. I'm getting 13.6. Some people are getting 13.8. I don't know where we are getting it wrong. I'm getting 13.6 million. Can you people confirm? I'm getting 13.6 million. I'm getting total temporal difference of 13.6 million. Confirm. Naweza tumia hii hapa ni kutoa kuongeza hapa. Hapa ni kuongeza. How much are you getting? 13.6. Yes, Sheila, I may confirm that it is 13.6 million. 13.6 million, that is our total temporal difference. Now, due to this difference, we arrive to what? To the deferred tax. So this is the one that will assist us to get to our deferred tax. But then, before maybe we compute our deferred tax of what the examiner expected us to do, I would like to remind you that for the financial management and financial reporting, we have introduced early morning session. We have introduced early morning session that start from 5 a.m. to 7 a.m. 5 a.m. to 7 a.m. Evening session still retain. Evening session is still retain. It's time from 8 p.m. to 10 p.m. So if you have not joined us, please make sure that at least you're able to join us in your favorite timing. So remember, we charge 4,800 Kenya shilling per unit, and we are allowed to two installment is allowed. And our customer care number, you may wish to talk to us. You can use our customer care number as these, or alternatively, you can use 793 555 000. Can use the two numbers. If you wish to inquire. Anything. So we allow two installment. So if you have 2,400 and you wish to maybe attend our financial management class, you'll be added to the group. So I want us to complete this. By computing our deferred tax. Now, class, to compute the deferred tax here, we just need the taxable temporal difference and then the corporation tax. Did the examiner give us the corporation tax here? Did the examiner give us corporation tax here? Did the examiner give us corporation tax? From the question? Just look at the question. For those people who have joined late, don't know whether you are having the question. Yeah, we had a corporation tax of 30%. We had a corporation tax of what? 30%. Therefore, to get our deferred tax, whatever that examiner wanted us to deferred tax, asset or liability. You see, examiner anatuambia ati deferred tax asset or liability. Just take 30%, divide by what? 30% multiply by what? Multiply by what we have here as 13.6. So deferred tax. In fact, this is a positive. So deferred tax asset, 30% of 13.6, which will give us it will give us what? It will give us let me check. So it is 0.3 times 13.6. I'm getting 4.08. Yes, 4.08 as the deferred tax. So you can see the process. Of getting the deferred tax. First of all, you need to identify the carrying amount, and then you identify the tax base. After that, you look at the temporal difference. Then you do the summation to get the total temporal difference. After that, You multiply that with the tax rate, and then you'll be able to get the deferred tax. The deferred tax. The deferred tax. So class, this is just at a high level. This is just at a high level for you to be able to identify or to understand what happens if the asset carrying amount is higher than the tax base. That means it will be taxable. It will be taxable by the taxman. It will be taxable by the taxman. I would like to get a signal from you whether we are together. Are we together? Are we together? For those who are joining us for the first time, communication is using Y or N. N for no, Y for yes. Are we together? Are we together? Are we together up to that point? Are we together up to that point? Another information that is coming in is that the portal that was not working, I think is now restored. I think it is now restored. The portal, the CASNEP portal that was not working, it is now restored. Therefore, you can proceed and do your booking. You can proceed and do your booking. You can proceed and do your booking. So, is there any question? Is there any question? Any question so far? Any question so far before we wind our today's session? Is there any question? Any question? All right, there seems to be no question. I take this opportunity to thank everyone for having time to attend our today's session. I know it's a big sacrifice. I know it's a big sacrifice, and it is never in vain. It is never in vain. It's never in vain. Otherwise, allow us to stop our session at that point and plan for another one later. Otherwise, thank you so much. May you all have a blessed afternoon and a happy weekend. Have a blessed afternoon and a happy weekend. Goodbye, everyone. Goodbye, everyone. Asante Musrima, asante.